Hi traders. In today's video, we will deal with a strategy based on a popular candlestick pattern. The strategy is from the internal team of TradingView and I think it will be interesting to see the results. If you noticed from the previous video 008 with the coyote strategy, I changed the way I present the winner of the strategy on the opening screen and the thumbnail of the video. Instead of showing the top performer for the total of the results, I also show the winners in each category. Since usually cryptos take the top places, forex and indices with metals will be mentioned too so that you can have a glance at the performance of the category you're interested in. Of course, as always, direct links to Google Sheets are provided in the description. The XLS files can be downloaded too, in case the online spreadsheet is not so convenient to use. So today we have the inside bar strategy from TradingView. To have the strategy in your charts, you click the indicators pop-up, and as you see from the screenshot, you click on technicals and then strategies. Scroll to the appropriate strategy. This one has the name inside bar strategy. Notice there is a small question mark at the right of the name. If you click that, will take you to a link with details of the strategy. These details I will read you right now. The inside bar strategy is a significant candlestick pattern that helps traders time entries with low risk. This strategy can be used to follow and trade with a trend or with reversals. An inside bar is a candle that is essentially covered by the previous candle. When you see this type of candle, it usually means that there has been reduced volatility within markets. The inside bars are not all equal in terms of size and range, and it is important to keep this in mind throughout your analysis. Traders use the inside bar strategy by waiting for the price to make a reversal move and then form an inside bar. This way they can control their positions based on specific criteria and manage the perfect entry point by waiting for an ideal reversal in the market. In addition, there would then be volatility contraction, allowing the buying pressure to potentially continue if the price were to break out higher. The approach is also less prone to fake outs. As mentioned earlier, inside bars can vary in terms of size and can also vary in range, color, etc. Here are a few types of bars that you will most likely use when utilizing the inside bar strategy. The standard. The standard inside bar has a small range and is covered by the previous candle. This standard candle tells the trader that there is indecision and low volatility within the markets. The inside bar with a large range. This bar is still covered by the previous candle, but the range is larger than the standard. Depending on the close, the bar could represent indecision, trend, or a reversal within the market. Multiple inside bars within a single candle pattern. This pattern tells the trader where there is low volatility within the markets. As market volatility is always shifting, it helps to see multiple inside bars together because it is a strong sign that there will be a big movement in the markets. Now let's analyze how traders can manage entries and exits while using this specific strategy. Entry. Some traders prefer to enter using a stop order and when the price breaks out of the inside bar. Many like this method because they enter the trade just as the price moves in their favor. Please be mindful, however, that there is a possibility of a false breakout in this case. Traders could also wait for the candle to close, but this comes with the risk of missing a big move in the market. Our suggestion would be to find whichever method works best for you. Exit. Depending on what you are trading and what your end goals are, your exits will vary. If you are looking to capture a swing, some traders find it most helpful to exit trades before any opposition starts. If aiming to ride a trend, however, traders tend to trail their stop loss just as the market begins to adjust to their prediction. There are limitations to almost every indicator, and those specific to the inside bar strategy would be choosing to trade the breakout of the indicator. We caution traders here because with low probability trades like this example, the market does not have a smooth range and it could prove more trouble than it is worth. The inside bar strategy is a candlestick pattern used to time entries with low risk. It can be used to follow and trade with a trend or show reversals within the market through its candles. Inside bars vary in size and range of the candle body, with the smaller variants showing an indecisive market. The strategy is useful when determining market strength and capturing a swing or riding a trend on the exit. This is the text from the strategy page. Let's look at a visual representation of the inside bar from the dailyfx.com website. High and low of the inside bar are completely covered by the preceding bar high and low. I also want to remind you that for all strategies I go with the default settings. There will be a separate series of videos where I will be focused only on tweaking certain strategies to achieve the best possible results. Let's go to the results and surprise, cryptos took over once again the ranks. This strategy has participants from all categories. One characteristic is the lower profit factor for the results. We're not used so far with a top profit factor performance of 1.875. This is not the only factor that will boost or ban a strategy but start to show us a lead to the results. Let's go to the forex screenshot. Euro CHF gives us a 1.304 profit factor and medium to low results regarding net profits, max drawdown, shape, and Sortino ratio. Now the last category before the ranking results. The indices and metals category, with HK33 HKD with 2 hours that we show in other strategies and 1.21 profit factor. I don't stand a lot for the screenshots because you can pause the video or even better see all the details at the first link in the description. Now let's go to the second link in the description, the database, and ranking XLS. This is the database of the strategies with details regarding the detailed page and source of the strategy. Notice that the links for the strategies of TradingView bring a chart together with the details of the strategy. At the left of the page, there is a slider you can use to expand the detailed page and read it better. So, we came to the ranking sheet and we see that camel in the desert with so much hot and sand turbulence decided to stay back and rest for a while. The strategy lies at 8th place of a total of 9 strategies so far. Notice a column with the title drawdown percentage. This is the percentage of the average max drawdown from all the entries compared with the average net profit. Consider this as a risk level measurement. Don't confuse it with the drawdown that some prop firms say regarding their requirements to enter their plans. This is an average of all the rows with a profit factor of over 1. Summarizing all these, we have to say what most of the time many traders say, and this is that a pattern alone is like pinpointing your position at your GPS with just one satellite. It will try to estimate but will not lock your position. You need a lot more to be close to your real position. In other words, the magic word is confluence. We will deal with a lot more in this channel. Stay tuned. If you have anything to say or suggestions for the current strategies or strategies you want to test, do let me know in the comments. Remember, finding an edge to your trading and applying proper risk management and psychology is the recipe for success. Thanks for your time. Sincerely, the trading elephant himself.